You are listening to the Lending Edge podcast, hosted by Scot Rose. Let's get started.
Hello, everyone, and welcome to the Lending Edge podcast. I'm excited for our guest today, Sarah Wheeler from HousingWire, and we're going to jump into a lot of interesting conversations and discussions. Sarah brings a great perspective in our industry because she gets the chance to talk to so many different people from varying verticals within our space, and so I think she brings a really well-rounded, perspective to all the issues going on within mortgage, lending, real estate today. And so we're going to dive into that with her. So with that said, let's get started. All right, Sarah, welcome to the Lending Edge podcast. I really appreciate you coming to join us today. Thank you so much.
I'm so excited to be here.
Well, I think, I don't think you need much of an introduction at this point in our industry. But for some, I would like to kind of just give a little bit of background. I think at this point, we can kind of consider you a veteran in the housing space. Been over 10 years since you've been with HousingWire. And obviously, you've been in news and media for your career. But maybe just give the audience a little bit of background and a little bit about Sarah.
Okay. So that's so nice. Started out at newspapers. This was a long time ago when there were newspapers. Of course, there still are newspapers, but so many fewer now. Love journalism. I've done that at different times. I've also done copy edits for advertising. I've been in PR. I owned a home health agency and ran a lot of the PR marketing and the things that I could do there as a non-licensed clinician. I wasn't a clinician. And I think that actually gave me a lot of really good insights that led, that I've been able to use in this industry because they're so similar as far as like you're trying to, it's a tough industry. There's a lot of challenges. The margins are small. It's very regulated. And I think really being a business owner is so helpful now as I run a newsroom and a content studio that is focused on providing, beneficial information to people running businesses. I think it's really helpful that I've been in that position where you eat what you kill, where you, it's all on you, where, you're fighting a lot of things at the same time, market challenges, and also finding opportunities. So I feel like that's been probably, of course, the journalism part is what I love, and I'm so thankful for it. I think the business owner part of it helps give me, maybe the secret sauce of like, this is the angle that we take at HousingWire is like, it's not just news, it's not just information, but it's like news and information that you need to run your business and to be successful.
Yeah, I mean, look, I have to say, I've enjoyed working with you directly over the last many years that we've had the opportunity to work together in various capacities in the industry. But I have to say, I think you and Clayton at the team at HousingWire have just done a fantastic job of bringing really the best media publication to our space. I mean, I don't know anybody in the profession who doesn't tune in to HousingWire. You guys have great events as well. I mean, the gathering this year, I know this year, unfortunately, I couldn't make it. I had my kids' spring break at the same time and conflicting family vacation, but it was really a bummer to miss because you've really pulled in a lot of leaders in our space and done a great job at organizing that and really staying in touch with all the key issues and everything going on surrounding our industry. And what I really was excited to talk to you so much about today is that you also bring a really broad perspective because you're talking to folks directly in classes industry with valuation, you're dealing with title, you're dealing with real estate agents, you're following all the NAR settlements, etc. There's just so much happening in our industry across all these different verticals, right? And I also think we're heading into a world where a lot of these verticals are starting to potentially merge together to find ways to streamline our solutions and create better solutions for the end users, the stakeholders, the consumers, etc. So maybe we can dive in a little bit. I would love to just get your perspective right now. Like, what are some of the top issues on your mind? What are you seeing? what should people be thinking about right now, that you're getting the, front row seat to kind of look at in our space?
Well, first, thank you for those kind words. We try really hard. We have an amazing team. And I do think, our catchphrase now is the full picture. And we feel like there is so much advantage in seeing throughout housing, right? It's not just mortgage or real estate or appraisal or title, but how all those things go together. So, and that's what we did at the gathering for sure, but that's what we do in our coverage every day. And so there are some major themes that are affecting all of those factors. I think the biggest one is right now is affordability, right? We see it, affordability affects wherever you are in the housing industry because we're in this really unique situation where typically when you have mortgage rates go up, you have home prices come down. I mean, it's a pretty easy formula if you look back and go, okay, well, here's what we can expect. And we just had, the policies that came into place through COVID, the just really unintended consequences of lowering those, the Fed funds rate down to zero, and then the low mortgage rates, which I think everyone thought. I just don't think anyone saw what was coming. And what was coming was the biggest refi boom that we could ever imagine. And then how that has affected everything else. And of course, at the heart of that is inventory too. So we do have these competing factors going on. I was thinking back when I joined HousingWire in 2013. We were still in the era. I mean, 2013 is pretty late if you think about like the financial crisis was in the rearview mirror.
Yeah.
We had all of, we were well on our way with the non-QM, with the QM laws and things like that. But one of the things that we were always reporting on then was just the vast amount of inventory, vacant inventory sitting out there, pulling down home values in neighborhoods across the country. And just what a difference 10 years makes. I mean, inventory, like we had so many vacant boarded up houses at the time. We had so many houses in foreclosure that were taking years to get through the process. Property preservation was a huge topic. I mean, I don't know the last time we reported on a property preservation story.
Right.
And that's because, there's so little inventory out there. You still have a subset of demand that is pretty much like, here's the baseline demand. There's always going to be about 4.5 million people who will buy homes no matter what's going on. Interest rates can go way up, the economy can be in trouble. All these things, there are going to be out of how many people? 330 million people in the US. There are going to be a subset of about 4 to 4.5 million people that are going to buy homes every single year. And that's what we see. And so that demand is there, whether there are, a million homes on the market or 100,000 homes on the market. And what we see this year is that we have so few homes on the market that demand is really keeping home prices up.
Right.
Now, this is very market dependent. We have seen, so for instance, the Austin market, definitely home prices have come down there. And what we're seeing most across the country is home price growth is slowing down. So it's still growing. I was just at the MBA secondary conference and I think they're projecting 5%, 3 to 4 to 5% growth in home prices this year.
I heard that,
So
yeah.
that's still growth, but
Yep.
that's much slowed down from like the 19% of like 2021 or whatever you want to look at, the double digit growth that we've had. Very market specific. Again, there are coastal markets in Florida that are really feeling some effects from some regulation there on condos and all that. But
Yeah.
overall, it's not like, oh, home prices are back to 2019 levels, and mortgage rates are higher. It's like, no, mortgage rates are higher, home prices are higher. People are feeling squeezed from inflation, on other things too. So affordability, number one thing we see, number one thing the the Biden administration is trying to address too. And it's not an easy thing to figure out how that's going to get better.
Well, it's hard when you have such strong demand in a market and in a place where rates are going up, adding to that additional layer of expense, really affecting overall affordability. And then I know you and Logan like to go back and forth on this a bit, but I tend to fall on your side. Look, Logan's way smarter than me all day long, 10 times smarter. But it does sure seem to feel like there's a rate lock effect out there, and people are not selling their homes because it's hard to justify, hey, I've got this, $2,500 a month payment or whatever it is with a 2.75% interest rate in order to move somewhere else and into a different home at 7% is going to drastically affect that. If you're looking at getting into an even like type home, you're going to spend double the money monthly output, right? So people are staying put right now and they're not putting their house on the market, and therefore there's no inventory, right?
People are staying put. And we saw that even before the pandemic, that you had the longevity of people staying in their homes was growing. It used to be 3 to 5 years way back in the day. And then it got to like 10 to 12 years. Now it's over 13 years is
Wow.
your average. And in some places it's much longer. In California, it's much higher than that because, you're locked in a, you've got Prop 13. You've got a lot of reasons why people may not
Tax
want to
benefit, right?
sell.
You get locked in at a certain rate. Yeah.
Yep, for their property taxes and things like that. So that was already happening. And then, like you said, you bought a home and you've got, say, 3%. You might even have lower than 3%. So I think that where Logan and I differ, and it's the same thing. Mike Simonson, so he's the president of Altos Research, which is part of HousingWire these days. And they both look at it. And from the data side, when you have rates go up, you have inventory increase in a few ways. So when rates go up, it becomes your inventory that gets on the market may stay there longer, right? Because people are dealing with higher interest rates. So it's a way of measuring what comes on the market, what stays on the market, days on market, right? They're not wrong. The data, I mean, they have all the data, right?
Yeah. Yeah. Yeah.
So I'm a journalist.
And they're
I'm
the
not a
analysts.
data person.
Exactly.
They're the
Yes.
analysts.
Yeah. Yeah.
But what I think they're not measuring, and what they would even say, is that when you look at transactions, right? You look at a healthy market has a certain amount of inventory and a kind of a balance of supply and demand. And right now, we don't have a ton of demand. We don't, because things are kind of expensive. But like I said, you have all that you have that 4.5 million that's always there. And then you have this big cohort of millennials that are between the ages of 30 and 40, that this is their peak home buying age. And it has been that way since 2020. And many of them have been shut out. Of course, I mean, lots of them have bought homes, right? But this is such a big cohort that you have more demand than you might normally. And then you just have such little supply. And I think this is where we're really seeing, the Biden administration going, well, what can we do about this? Because, housing is very local. And so many of the things that, influence a market are have nothing to do with the federal government, right? It's like, what people want to pay, and how many houses are for sale, and the zoning laws. And there's a lot of things that they don't control and can't control. So
Yeah.
they're really looking at ways that they can make things more affordable. And really what they can do is on the edges. They can't cap, okay, home prices can't go up that much. That's not, we're a free market,
Free
right?
market.
So
Yep.
the market's going to say no, home prices have gone up. But what they can do is say, okay, well, what Freddie and Fannie are going to buy as far as the loans, we're going to look at the fees that you're charging. We're going to look at title. We're going to look at all of these places where we can take a bite on the edges. And that's what I think we're really looking at. That's one of the big trends, is like all of these things coming down the pike that have been there since the Biden administration came in. But specifically, he outlined some things in his State of the Union speech, where I think what you can see from that is like the frustration at Main Street finally got up to the DC level. And it's like, we can't buy homes, right? There's, things are locked in. What are we going to do? And this is one of the things that they're doing.
It's one of the things they're going to have to try to help solve for, right? And definitely going to be on the mind of their constituents going into the election coming up at the end of the year. And I think, to your point as well, the affordability obviously is a big issue because it impacts all of us, right? It impacts the total addressable market across mortgage, appraisal, title. When there's no homes transacting because there's affordability challenges, et cetera, then a lot of our businesses are affected by that. I mean, I think I heard a stat potentially even on your podcast earlier this week that we're down like 80% transactional volume from the peak of the market previously. I mean, that's a lot of that's a significant amount of TAM taken away from all of our businesses, and everybody's been fighting in our space the last 2 years now. It really feels like 2 years since rates really started to go up and the correction kind of took place. I mean, our industry has kind of been in a recession of its own for the last couple of years, and I know you and Logan talk about that. So yeah, it's impacting all of us in a major way, right?
It is, and I think that these are tricky problems to solve if you think about inventory, for instance. So it's not just like, okay, we have all these existing homes, and so one of the questions that you'll get, I'm sure you get this from family members, right? If you're in housing, it's like, well, the builders can just build more homes, and it's like it really doesn't work like that. It seems counterintuitive, but really that's not the answer because first of all, in a lot of places, there's nowhere to build.
There's no space anymore.
There's no
Yeah.
space.
Yeah.
There's no local desire for infill housing, right? So even if there is space, you have people who are like, not in my backyard, and they don't want the kinds of density that could increase housing for people. Things are zoned in such a way that it's very expensive. I think and I follow a ton of developers and builders in California, actually all over the country, but in California. And it is just amazing. I think they should get a medal every time they finish building something because the process is so long and so complicated and so costly that that's definitely not going to be a solution in California. Now, I live in Texas and I live in a part of DFW.
Sorry to pause there real quick. Is that because of like regulations and permitting and things of that nature? There's just so much red tape around it. It's so difficult and expensive to build there.
Absolutely. So, I mean, there are a lot of things like parking. You have to, if you build something, you have to have so many parking places for so many bedrooms that you have. And if you have just a very small amount of land, the parking makes it untenable to do that. So that's why when they passed the ordinance at a state level that you could build an ADU in the backyard or on your land, you could increase the density of housing on a single family plot of land that already had a single family home on it. Huge, huge. But if you make the permitting so difficult,
Yeah.
if you make it like, well, there has to be, what's the access to the ADU? Do you have to have a driveway? Do you have to have this? Do you have to, what kind of materials are you going to use? It becomes so expensive and it's going to take you so long that it just doesn't pencil. It just does not make sense. So that's that's a very particular part of the country, but California's huge. So it's a and it has a huge population of people who would like to buy homes that have been shut out. So you think about that. You think about, like I said, I live in the DFW area. This is like the center of building, right? I live in what was formerly a cow pasture. And I think the last 3 homes I've lived in were one was a former horse pasture, but there's lots of room. There's lots of land. There's a pretty permissive building environment. It's, labor is less expensive. You don't have a lot of union jobs. This is like the best place, and it's very typical for Sunbelt areas to have a lot of building. Even here, the builders, as Logan Wall was point out, they're not a charity. They're doing this for money, and so they are very sensitive to putting too much supply on the market. They could, yes, the builder that I bought this house from could, expand and we'd have twice as many houses, in this neighborhood as next year. Why would they do that? Every time
they're not going to be in the market of having a bunch of spec homes sitting there with the cost to carry these days and everything else that they're dealing with, right?
Absolutely. And they learned their lesson in the last 10 years. And so they're very careful about that. And that's in a place where everything else being equal, it's easy to do, right? I mean, they're going to make their money back. They can manage all the things. Many parts in the country, it just doesn't even make sense. So building is not the answer to our inventory problem. And so we're trying to find some of those things. I think you and I talked about this when we were talking about this podcast coming up, was that when you have that really low rate, if you want to move, if you get a new job, sometimes you're like, okay, I'm just going to keep that house,
Right.
rent it
Yeah.
out, buy
Yeah.
this new house, and now you've taken a new house off the market without getting, without putting one in. And that's usually, first time home buyers, they come in, they buy a house, they consume a house, a property without bringing something. Now, if you have those move up, move down buyers and they're not contributing a house while they're buying a house, I mean, it's really making the whole problem worse.
100%. I was mentioning I was at the doctor earlier this week, and she's a younger doctor. Her and her husband were in a townhouse. They're looking to buy a new home right now, and they're going to keep their townhouse and rent it, because she's like, we'll never let go of that rate, right? We're going to keep that forever, and they're just going to look for a new house and maintain that property. So there's one person taking a house off the market that's not putting a house on the market, and I'm sure it's that way across the board in many different areas. I mean, I still, in hindsight, am killing myself for selling a condo that we had a few years ago when we bought this house, and wishing that we hadn't sold that based on what the market has done.
Well, and so I'm an empty nester, and so typically at my age, it's like, oh, let's downsize, and I actually did. I bought a townhouse, but if you are locked into a low rate on your big house, you're going to pay more. The houses, house prices have gone up, and then
Yeah.
the mortgage rate's more, so you're going to pay more every month for maybe a smaller house, not as nice house. No, you're just
Yeah.
going to sit in that giant house and try to figure out what to do with it.
Right. So where do you think that equilibrium is then? What do you think the rate market needs to be for some of this to kind of start to open up? And I also think you've talked a little bit of, in some of your podcasts with varying folks around, also just time, right? Like people will start to get used to it. They'll settle in, and life will happen, and we'll start to move more into recognizing that this, upper fives, mid sixes, whatever, low sixes is more standard, and the market will kind of return to people being more active, and maybe forget about the fact that they might cost them a little bit more money, or maybe they have more equity they could take to put down on something else, and reduce the cost by applying more money down. Any thoughts on that?
I do have thoughts on that. I think you're exactly right on the time issue. It takes people time to get used to the new normal. And in 2022, we had rates go from in the twos to in the sixes to back down to back up. It was a shock to the system. And so I think that what we see is anytime we get into the sixes, now, if you get into the sixes, there's a bump in purchase applications and people starting mortgage applications, but low sixes would be like the new, like that would grease thing, that would provide enough liquidity in the market, if you want to say that, like people's comfort level to be like, okay, yeah, it's not my 3% rate, it's not my 4% rate, but we feel like low sixes would be the sweet spot for the next couple of years, right? And I think that when I talked to Mike Fratantoni of the MBA, his forecast now is like, I think 6.5 at some point in 2025.
Yeah.
Of course, anytime we talk about rates, like it's rough because in November, when we thought that the Federal Reserve was going to have maybe up to 6 rate cuts this year in 2024, huge optimism. We saw purchase applications jump. We saw all sorts of great signs there. And then, a few months later, it had gone to four rate cuts, 3 rate cuts, 2 rate cuts. And then it was like, yeah, I don't know if we're going to be cutting rates this year at all. And that's what slowed everything down. It's hard because, as we know, in housing, people in the housing profession have been in a recession for more than, coming up on 2 years.
Yeah.
It's been
Absolutely.
rough.
Yeah.
And we all know that whatever part of housing you touch, everybody is, most people are struggling.
Everyone's been affected. And I mean, honestly, I started in the more corporate side of the appraisal world. I started, appraising in 95, but in 2004, I moved into the corporate world and lived through the housing crisis. And honestly, I think there's less of an addressable market now than there was then, even because, to your point, there was REO, there was different things taking place that required valuations and helped keep businesses more healthy during that period of time, and keep moving on. But this has been a complete, that with the lowest default rates that we've seen, the highest origination rates that we've seen in a long time, this lock-in effect, everything altogether has just really taken out the addressable market completely.
It's so crazy. I mean, in the before, say before 2020, right? So we had like, oh, mortgage rates went up a little bit. Home builders were having, a hard season in 2018, for instance. Oh, home prices did this. But at that time, I cannot imagine having a podcast where I had an economist on twice a week. There
Right.
just wasn't that much happening. Like, what would we talk about? Oh, interest rates since the beginning of the year have gone up 1/4%. It's like,
Right.
but now it is amazing to me that there's so much happening. And I would say that one of the other trends that I see happening, Scott, and this is interesting if you're anywhere in housing, and that's the what's happening on the real estate side with the real estate lawsuit commissions and then the
Yeah.
settlement of those lawsuits is that that's affecting everybody. And I think the reason that affects everyone is you're changing how home buyers might get into the market, right? So on a fundamental level, some of that might be changing. And if you think back to when Zillow began and just the disruption that was to, a monopoly that the MLS has had, right? For finding a home. I mean, you couldn't, there was not a way to, you as someone who is not a licensed realtor, to find out which homes were on the market or to easily find them if you
Right.
could drive around. And then, Zillow used that, to charge then agents for leads. I mean, they really changed the game at that point. I feel like we're at another inflection point with the commission lawsuits and now the settlements where that buyer's agent has really changed, and it took no time at all for home buyers to adjust to that and be like, oh, this should mean that I don't have to pay commission, or this should mean this. And we heard right away
Yeah.
that they were approaching listing agents. So these are the people who are like, you're the seller, they list a home and saying, hey, I want to make an offer and I don't have a buyer's agent. So you should take my offer because it's going to be less money that your seller has to pay. And, all of these things. It was instant
Yeah.
that they
Well, it's
started
been pretty
hearing that.
nationally, like, right? The major news publications have picked up on it. And so consumers are hearing it. I know I talked to a real estate agent who I know really well earlier this week and was just picking her brain on this topic. And, she's very successful. And she mentioned that, she also has, when she's going on new listing appointments, where the seller is like, I'm not going to pay a buy side commission. It's like,
Yep.
I'm not going to do it, right? So that they're already starting to hear this and they're thinking to themselves, hey, I want to pocket more money on this transaction. I'm not paying the buy side, so I'll pay you to list it, but I'm not paying a buying agent. The buyer will have to figure that out.
And if you're a lender, then is the home buyer coming to you first? If they're not using a buyer's agent, are they approaching you first and being like, okay, here's and I think that's a great conversation anyway. I think most real estate agents would be like, I need to know how much you're qualified for.
Yeah,
There's no point in us going on. I know, especially after 2020, it was like, if you don't have a pre-qual letter, if I don't know what we're looking for, we're not just going out kicking tires. That's not going to happen anymore.
right,
So I think that's already been part of it, but I personally think there's a lot of value in a really good buy side agent. I think there's a lot of value there. But I also think that some people don't see that value. So how that's affecting everybody in the process is like you think about that person who's going to the listing agent and saying, just take mine. Well, we're already back in some markets having multiple offers on the same house. I think that's where you go. I feel like you're at a real disadvantage if you're the home buyer and you
yes,
don't have an agent. I mean, you don't even know how to negotiate all that. You don't know what's going on. Who's gonna set up closing, who's gonna do this. And so I feel like there's a lot percolating out there. But what I don't think is gonna happen is what we saw the headlines, and I think it was even people in government saying, oh, well, this is gonna help home prices. And it's like, no, this is not going to help home price. It has nothing to do with what the sales price of a house is. It's
right,
just like who's gonna pocket that money that used to go to that commission. And I don't think that your seller is going to be like, hey, now that I don't have to pay that commission, I'm going to reduce my house by 5% or
No.
3%. That's not going
No,
to happen.
I agree. Because both, and again, in a competitive buying situation, when you have two people advocating, the buy side is like you mentioned earlier, the buyer is going and saying, hey, I want to make this offer, but you don't have to pay a buy side. So sell it for less, but there's still that component that's missing. So it's not like the market really benefited from that. I think the out of pocket on the buy side, right? It all kind of flushes itself out. It's who's going to win there? Like the seller's not going to necessarily win. The buy side's going to want to win some too, right?
I think your listing agent's going to win. I think your listing agent in that situation is going to, first of all, I know some listing agents who are going to be like, I'm not dealing with you if you don't have a buy side agent, right? Like that could be a nightmare. Like
Well, I
my
know that
time
they'll
is worth
put
more
up
than
if
that.
they do deal with them, they'll put some agreements in place that says you're a customer. I'm not advocating for you at all. You're on your own.
Right. So it's just such an interesting dynamic right now. And that along with everything else, to me, it's been over the last couple years, we keep asking who gets to the customer first. Because we've known for a couple years now, you can see buying signal behavior in what customers are doing. And so you have this whole industry that's like, hey, we can get you the leads, we can see the signals, we know when someone's in the market. But I wonder how all this is affecting that. And I also just wonder, like, who does the agent trust, who does the home buyer trust in this as their trusted advisor? And I think there's a huge opportunity there. If you are a buy side agent, you better become that trusted advisor. You are not the person who's like, let me take you around to houses.
Yeah.
I don't think if you're a good buy side agent, you've never been that anyway. But if you're
Right.
some part-time person, maybe that's your whole value. But also if you're a lender, if you're if you're a financial advisor, you need to be the person who can see the whole picture. And I think that person is going to win in this environment, no matter where they sit.
Right. Because they can help guide their customer through this process as well in certain capacities, right? Through the mortgage process, etc. And
Yep.
kind of be a coach for that buyer, to help them along. And I think too, one thing I think about around the buy side is, if I was buying in a new market that I didn't know at all, I would want a trusted advisor that was representing me in that market so that I didn't do something that I would drastically regret downstream. So I do think there's value for buy side agents as well. I was reading one of your articles earlier this week on the DOJ basically saying they don't want co-ops to be published anywhere, right? I think
Hmm.
that was the term. Like the NAR settlement talks about not publishing it in the MLS, but it sounds like the DOJs maybe potentially
Yep.
want to assert themselves and say, no, we don't want it published anywhere because they want that competition. And therefore, you can make an offer and say, hey, I want the seller to pay my buying agent, but then it would come out like in terms of the overall competition for that house, depending on the market and where that is. And then the buyer would be forced to address that to understand how they could get the seller the most valuable offer, no matter where that's being paid. They might offer more and say, I want you to pay the concessions for my buying agent, right? And have it work out that way. But when I'm reading that, it kind of made sense to me, I have to say. Like as a consumer, I like the idea of the buy side agent having a market there that's negotiable,
Hmm.
that's not
Right.
fixed, right? That's like, hey, you're paying every time you go buy a house, it's 2.8% or 3%, whatever market you're in. It seemingly makes some sense to me that you would be able to negotiate, and maybe you negotiate what's included in what they're doing for you. And there's a la carte services. If I'm buying a home in a market I know really, really well, and I've bought 5 houses, 6 houses already, maybe I just want to pay him to write a contract for me and help do that negotiation. And so it's a lesser fee. You don't, I don't know, just thinking it opens up the market. And then there's people, innovative folks coming out with new startup businesses and DIY platforms. And, where are those going to take the market? Where is their value in that potentially, more for sale by owners, etc.
Yeah, no, we are definitely seeing that and seeing people who are I just was talking to a company that it's like for sale by owner, only it's much more streamlined and you can find them and they're they're going to make it more visible and taking out some of the negatives of for sale by owner, which has been around forever.
Yeah.
And I think it's going to be interesting to see how those companies do.
I do too. I'm kind of excited, and I understand. Like, look, disruption is scary for a lot of people. I'm sure there's a lot of real estate agents out there that are frustrated. One thing I loved about the conversation I had earlier this week with my colleague and friend was that she was already thinking about opportunity in this. And I'm like, you're a great business person.
Yep.
Like, you're approaching this the right way. You see opportunity. You're thinking of ways to reinvent yourself, and you're going to be extremely successful through this transition. I have no doubt. Versus sitting on the sidelines, woe is me. Why is this happening to our industry? Why are they doing this? And obviously we see some of that in the valuation space too. Like, change brings opportunity. And also, when you see change that could potentially affect the users, the stakeholders of that solution in a positive way and open up something better for everybody around buying a home, to me, that's exciting. I see it as opportunity, and I'm really looking forward to see where all of this is going to shake out. And I think there's MLSs out there that are thinking about how they're going to reinvent themselves or how they
Yep.
bring value, and they have a lot of great ideas, and they're going to be successful. So I think there's opportunity here, and we'll look back in a couple of years on this and say, wow, this is pretty. Look at some of the cool things that came out of this change.
And I think, you have to find the value that you're offering. You also have to be good at articulating that value. So, like I said, and I know like Realtor.com came out with like 111 things that your agent does for you that you're not thinking about or whatever. They're like, oh, you want to do your own, you don't want to have an agent. Okay, get ready to do these 111 things. And
Right.
obviously, they went into a lot of detail on those
Yeah.
111
Yeah.
things. But I think that if you are one of those agents who's like your friend who's doing a great job, like you have to be able to articulate that too. Like, and in those negotiations, you can be like, here's what I am bringing to the table. Here's why you should pay for me because this is what I can do for you. And here's what the bottom line looks like for you. So I think that you're right. Anytime we have a disruption, it's difficult because the people who've been doing it one way forever, that it's not fun for them.
Yeah.
But I think if you do right by the consumer in the end, you're going to not have the regulators looking at you right because that's what they care about, and you're going to have satisfied customers. So it's finding that within this current system that I think is the challenge right now.
I couldn't agree more. And then hopefully, there's ways where this offers opportunity for technology to get involved. And also I think there's an opportunity um, where we include more of the downstream requirements that kind of slow that process down and moving them up front to the point of list. And I think a lot of listing agents are going to be able to see these opportunities on how they can position this property for sale, where mortgage lenders, where they can have things applied to that property, for instance, collecting data to support IBWs or desktop appraisals and things where we can drastically cut down on the time to acquire a valuation on a mortgage, even potentially get to it at real time so that that property can transact much easier. Potentially mortgage buyers would have more competition against cash buyers because everything that's required that could potentially be a pitfall in a mortgage transaction is already done, and they have more confidence the transaction can close, etc. There's a lot of that opportunity, I think, in front of us. And I know I'd like to talk a little bit with you about IBWs, but before we do that, we talked a little bit about title, and title being the other piece of collateral that happens in a transaction outside of valuation. What's going on in the title world these days? Is there modernization things happening, innovative solutions coming out? Like, what kind of change is potentially coming from the title perspective?
I do think that you do have title that's looking. I think where we're seeing so much innovation is with AI. And it's, if you think about title is rife with data, right? I mean, title at its heart, I feel like the same thing with appraisals. You have so much data that's attached to that. And so AI that can sift through that data, I think we're going to see more and more interesting solutions come that way. But what they have to deal with first is that there's a pretty solid effort by the Biden administration to kind of, carve out different places that don't even need title going forward, right? So there's a pilot program that waives the requirement for lenders' title insurance on certain refi transactions, right? They're like, this is something that we already know, the title shouldn't have changed. That was a part of what was announced during the State of the Union address in March by Biden was like, why do we need to do this? This could save, thousands of homeowners up to $1,500, right? Again, it goes back to that affordability thing where, if the median home price is now like over $400,000, $1,500 is not going to make the difference, but it's what they can do. It's what the government can do, right? Because by going to Fannie and Freddie, if the FHFA says, "Hey, this is what we need or don't need," that's where they can influence this. And so that's what we're seeing with title. Attorney opinion letters. They've really expanded the use of attorney opinion letters so that if you have one of those, then they'll the GSEs will take that instead of title on different transactions. So I feel like in some ways, it's sort of a crucible right now for the title industry, I would say, because we are going into a point where we should be able to see title more easily, right, with AI, but also just with the data that we currently have, the standardization of that data. And then, you have people who are actively trying to cut out that cost. It's part of, even the CFPB has really taken a bullseye, has put a bullseye on any what they call junk fees. And I don't think that in anyone's mind a title is a junk fee. It's not what we think of. But any fee that is being passed on to the consumer at this time, any part, especially at the closing table, is something that is really under scrutiny and a microscope right now. And so I think that if I'm in title, I am trying to figure out, you've got a lot to figure out right now, is what I would say.
Do you see, the title industry or certain players in the industry looking at this as an opportunity, although their addressable market might shrink with some of the things you're talking about? Are they coming up with solutions where they might be able to take advantage of using data and AI to provide a more streamlined solution to their customers?
Well, I think the irony is that all of this is coming at a time when fraud is huge, right? And AI, while it can solve some problems, it also creates a lot of problems. If you think about some of the fraud schemes we've seen when it comes to who owns the house. So at the same time that title is under attack in one way, I think um, it's maybe more important than ever to make sure that we have some system, right, to make sure that who actually owns this, who has first right to this, who can foreclose on this. So I think that the opportunity there is how are they responding to all the threats and proving, again, like we talked about with the real estate agents, what is the value they can bring in this environment?
That makes a lot of sense. That's a great example as well. With that in mind, kind of talking about technology, et cetera, and you and I talked about this a little bit yesterday, but as it relates to IBWs, inspection-based waivers, right? What we call them. It's basically the product that sits between a waiver, an appraisal waiver, and a full value determination. Fannie Mae has value acceptance plus data. Freddie has ACE plus PDR. We know these solutions are being utilized. They're in policy. They're out there. It's the next best thing to a waiver. Ed Pinto published some information on his monthly, call that he does on the economy and all the data in the mortgage space, et cetera. And it basically showed that there are two major lenders, the number one and number two, UWM Rocket, and they are like 54% of the utilization of these products being utilized today. I think there's two other lenders. If you layer in, it gets to 60%. So four lenders utilizing 60% of the products being completed with these inspection-based waivers. Being the leaders in the space, you'd think that would say a lot. They obviously see value in these products. They're faster, they're cheaper, they come with value certainty. So there's a rep and warrant. You don't have to worry about a potential repurchase on value, which I think, based on my view inside various organizations, is probably around 75% that is related to a value on a repurchase. Why do you think, or what's the challenge for some of these other lenders to start adopting technology?
It's such a great question. I think one of the things, so this is not just this technology, but on a really high level, adoption of technology is something that sort of defies what's going on. There's so much out there that you could use to make your business better, to do things faster, to be more efficient, that is not adopted. In fact, it's one of the reasons that the FHFA last year started their tech sprint. One of the questions they wanted to answer was, there's so much great technology already out there that people aren't using. Why are lenders not using it? What are the problems here? Why is there less adoption than we would think there would be? And I think one of the things that comes through is like the majority of mortgage loans are done by small shops. I mean, even, you can talk about Rocket and UWM, huge, huge. And yet still, what is their total market share? It's less than 50%. It's way less than 50%.
Oh yeah. Yeah.
And so you still have the majority of people out there doing, lenders who are mom and pop shops, or, what we would call small lenders, right? They're under a certain cap every year. And so I think that they've done it the way they've always done it. They don't have the CTO that I've been talking to, all these companies, they're technology people who are on the cutting edge, who came from that background. Do they even have somebody in technology at their company? Is it the president who's also the main salesperson, who's also the whatever? And he may not even know, to your point, that reps and warranties exists. He might be like, I'm not taking a chance. I don't want to have to mess with this. I'm going to do a full appraisal because then I don't have to come back and do it later. Right. Without really having the time or taking the time or expertise to know what those programs are. So I do think just some of it is just the nature of our industry, which is a lot of smaller players. And so, if they're going to do something different, that takes someone saying, we're willing to take a risk here. I'm willing to invest the time to understand this and what this looks like and change processes.
Yeah. Yeah. And I think too, some of them are relying on third-party technology platforms and have those technology platforms adopted the solution and the workflows to support these new products to make them available. And I think hopefully we'll see more and more people beginning to adopt them, especially knowing that, as we move into a refi market, when rates start to come back down, these products are going to be heavily utilized in those solutions. And if you have a product that can move much faster and reduce costs significantly for your customer, you're probably going to want to be ready to utilize those at that time.
Huge, great point that, this is the time to be looking towards how are you going to handle the next wave that comes? We know we're a cyclical industry. There is going to be a wave. What are you doing now? So I was at a session on AI at the secondary conference, and it was such a helpful, they framed it as three different kinds of, like, what are we talking about when we're talking about AI? And the very first level, before you even, the crawl, walk, run, the first level is automation. And then you have like AI that like does tasks, that thinks a little bit on tasks. And then there's like actual AI. But the truth is, there are still so many places that are not automated. There are so many things that we know people could be taking advantage of that they're not even automated yet.
Yeah.
That even if they just took those steps, even if they just did this, it doesn't take AI to use these waivers or these hybrid programs or whatever. It doesn't take AI to do that. It just, it's low hanging fruit in many ways. So I agree with you that, like, if you're going to do anything to be prepared, this would be the smart thing, because there's not going to be, if you are a shop that's not doing this, going up against, people who are doing this, where you've lost it. You've lost the advantage, especially when it comes to appraisals, because when we're in that kind of market, there's such a pain point, or they have been historically.
Yeah, I think there's actually an article you guys put out this week. I have it flagged. I haven't read it yet, but with the CEO of Mr. Cooper, where he's talking about leveraging automation and how they'll be able to scale without having to hire a bunch of resources. And, as the market comes back, they're going to be positioned to really take advantage of that. And
yeah,
then,
I did
go
that
ahead.
interview, and they have grown their company by 40% and added no new people.
Wow.
And so you go, that's the wave of the future, right? That's how you're prepared for what's next.
Yeah. Especially when you think of the cost to originate a loan right now, right? Speaking of AI, just real quick plug, because I know that myself and our CTO are going to head there, but you guys aren't you hosting we have a conference event is it July in Dallas?
Yes.
An
So we
AI?
are doing an AI Summit July 23rd at the George Bush Presidential Center, which is a beautiful venue, one day. And I can tell you that's what I'm working on right now, almost full time. I mean, in addition to other things I do, is
Yeah.
working with Brenna Nath on lining up the best people to speak on that, so that it's super practical. We want it to be very actionable. We want it to be whether you're a small, medium, or large company. And we have already had title appraisal, real estate lenders, everybody signing up because it really is across the industry. So thank you for that plug because we're super
Yeah.
excited.
Yeah, we're
Yeah.
excited to be there. So I think it'll be a fun event and important. I mean, it is the fastest moving. I've talked to so many tech executives across multiple industries, and the one thing in common with all of them is they've never seen a technology come in that's as fast moving, that's going to make change as quickly as this is. And I mean, it was what Chat GPT was not something we were all talking about even 12 to 16 months ago. And it's the forefront of everyone's conversation. We were at the dinner table just last night, and my 14-year-old son was talking about utilizing Chat GPT to do his homework. And hopefully he doesn't get in trouble for that, but his teachers are actually encouraging it in some classes, and they know that they're doing it. So they're trying to, instead of make it totally taboo, they're trying to teach the kids like, hey, here's a project where you should go use this technology. So you learn how to use it and how it can be beneficial for you. Which I think is great because they're showing the kids the ways that they can use them. Well, Sarah, this has been great. I have one last question for you that I like to ask, which is, if you had a magic wand right now today and you could change one thing in our industry or do one thing in our industry, what would that be?
Ah, that's such a great question. I love that. I always try to end with a question like this, but usually it doesn't get to be that fun because it's more like news based, right? But I love this question. I think I would try to get more inventory. I would wave a magic wand. It's a tough thing because people buy houses. It's one of the wealth building things that we've built into this country, right? I mean, that's why they want to buy a house. If you do too much on inventory, you're cutting into people's wealth building, right? They've planned on this for a certain amount. At the same time, if we don't get more, I feel like you're cutting out so many people, and it's just not going to be good for our country. I don't think that's, I think homeownership is a net good. And I think that if there was a way that we could do that, especially for people who have been cut out of this process for a long time, maybe disadvantaged borrowers, that's what I would do.
Well, I love that answer because I think you're right. I think it would do a lot for a lot of us. Our industry, so many people that I'm sure we all know personally that are struggling to find a home right now, that are moving, and there's really nothing out there, and it's still a challenge to find somewhere to live for people who are trying to find a home. So that would be definitely, it was a great answer. I love it. Sarah, thank you so much. As always, it's so great to catch up. I enjoy our conversations, and I appreciate you joining the podcast. It means a lot.
Thank you so much for having me on. This has been super fun. Thanks, Scott.
All right, Sarah. Well, everyone, I hope you enjoyed the discussion with Sarah as much as I did. She's such a dedicated and passionate professional in our space, and it's always great to have the opportunity to talk to her and hear what's going on from her perspective. Please like and subscribe if you enjoyed the podcast. I know we're only 2 episodes in, but we're looking forward to bringing a lot more guests on the show, and hopefully bringing great perspective and knowledge from varying leaders across the industry. Clearly, we've had a couple great ones so far. I'm super grateful for Sarah and for Faith on the previous episode, and just looking forward to have more conversations with great people. Thanks again, and as I mentioned, please like and subscribe.
Thank you for listening to the Lending Edge podcast. We hope you enjoyed the episode. Be sure to subscribe and follow.